This is not just a car company. This is not just a stock. It is a battleground of ideas. A story of relentless innovation pitted against fierce competition. A financial paradox wrapped in a technological revolution. This is Tesla. For over a decade, Tesla has been one of the most polarizing names on Wall Street. Depending on who you ask, it's either a revolutionary force destined to change the world and make investors rich, or it's a dangerously overvalued tech company built on a house of cards. So what's the truth? To figure out where Tesla stock might be headed over the next 12 months, we need to go beyond the headlines. We need to look at the fundamentals, the political landscape, the promises, and the peril. This is the ultimate bull versus bear showdown for Tesla. The argument for buying Tesla is built on one powerful idea: growth and disruption. First, the core business is strong. Tesla has proven it can manufacture electric vehicles at an immense scale. With gigafactories in 3 continents, it has produced millions of vehicles, and the Model Y has become not just the world's best-selling EV, but one of the best-selling cars of any kind, period. Crucially, Tesla has historically maintained industry-leading profit margins. This has been their superpower, the ability to make more money per vehicle than almost anyone else, giving them the flexibility to adjust prices and fight off competitors. Second, the ecosystem is expanding. When you buy a Tesla, you're buying into a closed-loop system. The biggest piece of this is the supercharger network. It's so dominant that legacy automakers like Ford, GM, and Rivian have signed deals to give their customers access. This isn't just a convenience. It's becoming the charging standard in North America, creating a new, high-margin revenue stream for Tesla. And third, you have the future growth catalysts. This is where the bull case gets really exciting. The Cybertruck and the Tesla Semi are now in production, tapping into 2 of the most profitable segments in the auto industry. And on the horizon is Tesla's next-generation low-cost vehicle, a potential game-changer that could put a Tesla in reach of millions more customers. But the ultimate bull case isn't about cars. It's about AI. Bulls believe that Tesla's full self-driving software will one day lead to a fleet of autonomous robotaxis generating recurring revenue on a scale we've never seen. And then there's Optimus, the humanoid robot. If Tesla can crack the code on robotics and AI, the car business will look like a footnote. This is the trillion-dollar potential that investors are betting on. But for every bull, there's a bear, with a compelling and frankly worrying list of concerns. First and foremost, competition is finally here. For years, Tesla had the playground to itself. Not anymore. In China, the world's largest EV market, BYD has surpassed Tesla in sales volume. In Europe and North America, legacy automakers are rolling out impressive EVs of their own, chipping away at Tesla's market share. This rising competition is forcing Tesla to cut prices, which directly impacts those industry-leading profit margins we just talked about. This is the single biggest fear for bears, that Tesla is becoming just another car company, facing the same brutal, low-margin realities as its rivals. Second, there are execution risks. The Cybertruck and semi-ramps have been slower than many hoped, and the promise of full self-driving has been just around the corner for years. Politically, FSD faces immense regulatory scrutiny from agencies like the National Highway Traffic Safety Administration. A major setback on the regulatory front could seriously damage the long-term bull thesis. Finally, there's the Elon factor. While he is the visionary behind Tesla's success, his focus is now split between multiple companies. His unpredictable nature and controversial presence on social media are seen by some investors as a significant source of risk and a distraction from the core mission. So let's cut through the noise and look at the numbers as of mid-2025. Valuation. Tesla's price-to-earnings, or PE ratio, has come down from its astronomical highs, but it still trades at a significant premium to traditional automakers. You are paying for future growth, not present-day performance, revenue and deliveries. While still growing, the rate of growth has slowed from the explosive pace seen in previous years. The key question is whether new models can re-accelerate this trend. Profitability. Watch the automotive gross margin number in every single earnings report. This is the bellwether. If it continues to decline due to price cuts and competition, the bear case gets stronger. If it stabilizes or improves, the bulls gain ground. Balance sheet. Tesla has a strong balance sheet with a solid cash position, giving it the resources to fund its ambitious projects and weather economic downturn. So after all of this, is Tesla stock a buy or a sell for the next 12 months? I am not a financial advisor, and this is not financial advice. But here is a framework for how to think about it. You might be a buyer if you believe the upcoming affordable model will reignite massive volume growth. Profit margins will stabilize and prove the bears wrong. That full self-driving, even if it takes years, will eventually be solved, making today's stock price look cheap. You see the AI potential as the real story. You might be a seller if you believe competition will continue to erode market share, and more importantly, crush profit margins. The stock's premium valuation is no longer justified in a world of slowing growth. The promises of FSD and Optimus are too far in the future and uncertain to bet on. And you see Tesla as simply a well-run but maturing automaker. My outlook for the next 12 months is one of continued volatility. The stock's performance will likely hinge on two key near-term factors: the margin narrative and the successful ramp-up of the Cybertruck. If Tesla can show that its margins have bottomed out and that it can profitably build and sell its new models at scale, the stock could perform very well. If margins continue to shrink and production stumbles, the stock will likely face significant headwinds. For the short-term trader, this volatility is an opportunity. For the long-term investor, the decision remains what it has always been: a high-risk, high-reward bet on a disruptive future. The story of Tesla stock is far from over, and the next 12 months will be one of the most important chapters yet.